So, very important concept, how to run a quote. I'm not talking about how you get into the mobile app or desktop app or whatever app you're using to run quotes. I'm talking about before you ever open that sucker up, what do you need to do while you're interacting with your client to make sure that you're going to give them the quote and first of all, the right policy that is right for them. And this seems like it would be really basic, but I see even very experienced agents making these same mistakes quite consistently. And these simple 3 tips I'm going to give you can help boost your AP and overall client satisfaction, prevent chargebacks just by getting them into the right plan and the right budget. So, first of all, number 1, you have to understand what the purpose of this policy is. Not just if you're doing, if you're getting leads. So whether it was a final expense or mortgage protection or whatever the purpose of the lead was. A good example of this is I was a part of a lead program this last fall that was focused on business owners and their retirement plans. Well, not everybody that came in through that, it was sketchy times in fall 2020 with some business owners. Doesn't mean that any of those people were the right fit for that program. So you might end up pivoting to a different product than what you would normally do with that lead type. So as an example, you might have a final expense lead and you get in there and they tell you, well, the main concern I have is making sure that the mortgage is paid off when I die. Well, that's actually a mortgage protection concept. And they'll say, yep, I have 20 years left on my mortgage. And that's all I care about is making sure that that's taken care of. Well, that is going to sound more like a term policy, possibly, rather than a small face amount final expense that would be used to cover just funeral or burial expenses and things like that. So you have to know the purpose, what they're going to use it for. And I highly recommend, if there are multiple purposes, not sure on that, writing multiple policies. So maybe while you're sitting there, you go, okay, great. I'm going to get you this policy that's going to take care of the mortgage when you die. But what do you have to take care of your burial expenses or cremation expenses, and maybe still write them a separate final expense policy? Now, all of this is what is their budget. You have to determine that. And I recommend setting a budget to where they're not going to have all their bills come in next month and go, oh my goodness, I don't have money for groceries, or this is a real one. If they're a smoker, maybe I know this because I had my parents do smoke. Some of them, if they haven't quit yet, it's very unlikely that they're going to quit, and they're likely not going to quit so that they can afford those life insurance premiums. So don't just tell people, well, you can quit smoking to afford your life insurance. You're going to get a charge back on that one. Okay, so number 2, what you need is their medications. You have to know what medications they're on. Very, very, very important, because a lot of people that will tell you they're perfectly healthy, or I haven't been to the doctor in so long or whatever, when you go, okay, great, covering my bases here. What medications do you take? Now, we're not talking about stuff that they got from the supplement aisle at Walmart. We're talking about prescription medications. Doesn't matter if they don't take it anymore. If they filled that prescription, you got to know about it. The MIB, Medical Information Bureau, I believe that's what it stands for. MIB is going to run their 5-year history of it. And if for some reason you're writing a policy where they're going to request medical records, it might even go further back than that. So you've got to know ahead of time, because application will get declined like that if there's something that doesn't jive. It's on a knockout list or something that's not due. And this is not everybody lies. Yes, a lot of applicants do lie. They do. But a lot of them are surrounded by people that are their age and possibly have more health conditions than they do. So in their eyes, they're doing great by just having high blood pressure, diabetes, and cholesterol problems. So because, they haven't lost a leg to diabetes yet, or they haven't had a heart attack or a stroke yet. So in their minds, they're in good health, but that's being managed by medication. So you've got to ask, what medications are they on before you quote? So far we've gotten to where you need to understand the purpose and the budget for this policy that you're going to be writing for them. You got to know what medications they are taking before you write a policy or make a quote. Third, you need to know what those medications are treating. Very important, because a lot of medications, particularly related to circulation and heart conditions, are dual use. And so very different if somebody's on a medication that's treating congestive heart failure. That's going to be a different situation, and you're going to need to write a different carrier than or a completely different plan than somebody who's just having some general preventive heart medication. Some doctors really do. You get to a certain age and you're a man, and it seems like, and they just start putting, or probably a man and overweight, and they start putting them on these standard medications once people get to a certain age, it seems like. So got to find out what those are treating, because it will affect what they qualify for. It doesn't mean that they won't qualify. It's just some carriers will let you select what that medication is being used to treat. And others are like, oh, if they're on that medication, no way. We don't accept anybody on that medication. Another thing that's fairly common is inhalers. Do they have asthma or do they have COPD? These things make a very big difference. Neuropathy, if they're taking something for neuropathy, is that diabetic neuropathy, or was this related to an injury when they were in the military or something like that? So you got to know those things. So to recap, before you quote, you have to know the purpose and the budget of the policy. Number 2 is the medications. Number 3, what those medications are treating. And you have to know these each and every time. The reason for that is, if you don't know it going into it, and they have one of these conditions or are on one of these medications, and you quote them just like, oh, wow, this is so easy. They just qualify for term. And you might have even quoted them preferred. There are even certain final expense plans where you can give people preferred ratings. So when you actually apply, first you might be going through the application, and the application might be more thorough than the questions you asked in the interview. In the interview, when you're talking to people, we're generally general, asking about their health. Well, the application is going to get very, very, very specific. And I learned this. I was trained to ask, in my first month, I was trained to ask if they had heart attack, stroke, or hepatitis. Heart attack, stroke, hepatitis, or diabetes. That's what I was trained to ask. Oh, wait, cancer. I found that people know that they need to disclose that. So yes, ask that. I found very much the hard way that you have to ask about COPD to a lot of people. A lot of people these days are getting COPD diagnoses. That's why we're seeing so much advertising about COPD and things like this. And that very much affects our rate. And what I found was, if I forgot to ask that question and had already quoted them, and they're like, oh, well, yeah, I have COPD, because they're on medication. So they're not sitting there hacking their lungs out in front of you or anything, or they're on a CPAP machine that gives them oxygen at night, but they don't have oxygen during the day. Yeah, that makes a big difference underwriting wise. So got to know that. And anytime I made that mistake, I didn't make the sale. You can rescue it sometimes, but typically what they're going to go and do is they'll have lost a little bit of trust in you because you quoted them a lower rate and then did a switcheroo and gave them a higher rate. They're going to probably shop you a little bit and realize that they really can't get a better deal anywhere else. And if you're lucky, they'll come back to you. Sometimes you just lose them altogether. So anytime you quote them a lower rate, then later on in the interview with them, you turn around and quote them a higher rate, you're gonna probably lose the sale. You are. Just like if you are in the fully underwritten market and you quote everybody at Preferred Plus, knowing full well that less than 10% of applicants ever qualify for Preferred Plus, and you may have been trained this way. And so what I'm saying is this isn't your fault. A lot of people were trained this way. And you come back and say, I have good news and bad news. And the good news is that they were approved, but they were approved at a lower rate. No. Or I'm sorry, a higher rate. What you do is you quote them the higher rate first. And then if they qualify at a better rate, then you come back to them and go, great news. And your clients love you. They don't feel like they're being strong-armed into something that you didn't actually sell them. So bear that in mind and try not to do that. Can even be construed as a bait and switch. You really want to stay away from that. So also, if you have a client that ends up taking a policy that was different than what they applied for. So say you quoted them the lower amount, you ended up having to give them the higher amount, or a completely different policy, or geez, this would be terrible, but end up having to put them in guaranteed issue. They're not going to be as happy with it. So even if they keep it for a time, those policies are much more likely to charge back. And because it just, the whole interaction and the level of satisfaction isn't there. So protect yourself and also protect your client. What we don't want to have is clients canceling, because typically then they are far more reluctant than to even meet with another agent because they had a bad experience with you and they don't want to feel ripped off again. So we want people to have coverage. We know it's good for them. So do them a favor by making sure that you give a complete interview, really understanding their needs and their health before quoting them, get them the coverage that's the right fit for them, and you'll be making more money. They'll have coverage. It's an absolute